Hi, I'm Penny Glover, and I am here with Christy Conger, Mortgage Loan Officer with Amarillo National Bank. She's been around for the past 25 years, and I just want to visit with her a little bit about mortgage today.
Hi.
How are you, Christy?
I'm good. How are you?
Very good.
Good.
So talk to me just a tiny bit. I'd love to know, why should a buyer come to Amarillo National Bank to get their mortgage?
That's a good question. The easiest answer is we are local. We're a family-owned bank. We've been in Amarillo for 131 years. Our mortgage department has been around for almost 40. It began in 1984.
Wow, that's great. Well, so do you service all of your loans?
We don't. We do service our conventional loans, but FHA or VA loans, which are also called government loans, we sell those in the secondary market because we get better pricing on the rates for the customers.
Okay. So at what time is best for a person to go ahead and come in and get started on getting pre-approved?
It's really best that you start with us. We would prefer that you come to us maybe even before they talk to you.
Okay.
But we want you to know what you can be approved for before you start looking at houses. Because it's no fun to fall in love with a house and then not know if you can buy it. So we'd love for you to start with us first.
Yeah, that's exactly right. It is terrible to find a home for someone and then we can't get through the pre-approval process fast enough and they lose out to someone else. So that is true.
Right.
That should be number one. No, how often can a buyer shop for a mortgage without it affecting their credit? I mean, is there a time frame? What works there for someone?
Yes, you are allowed to shop as a consumer for a mortgage loan. So you have 30 days from the initial credit pull on a mortgage report, where you can have other mortgage companies pull your credit as well, and it won't affect your score. So 30 days from the very first pull.
And that really does have to be just mortgage related.
Right.
It can't be shopping for cars or opening up credit card accounts or any of those things. That does not work.
Those all have different effects on your credit score. So this is
Okay.
just mortgage pulls.
Okay. And then what's the difference between FHA and conventional mortgage insurance?
So for FHA, there are two pieces. Part of it is called the upfront mortgage insurance premium, and that's actually financed into the loan. And then the second part on FHA is the monthly portion. It's part of your payment, and it's on there for the life of the loan.
Okay, so that it never goes away on
No.
FHA.
Not on FHA.
Okay, good to know.
Now on conventional, they're generally a monthly figure, and it's part of your payment until your loan to value reaches the right amount, which is below 80%. So eventually it could go away for you on conventional.
Okay, good. That's good to know that. And last but not least, interest rates are kind of high right now. And I know that, there's different tools and everything else. And I would like to know, for one, what are your thoughts? What is the best way to approach getting your interest rate? But then what about adjustable rate mortgages?
So adjustable rates have their times where they're popular and where it's a good idea. Right now is not one of them. What we're seeing on those adjustable rates is they are the same or sometimes even higher than the fixed rate.
Oh, wow.
So it doesn't make sense at all to take an adjustable rate when you could take a fixed
so
for the same.
Yeah, so what used to be a good tool for getting into a home, not necessarily anymore because of how high the interest rates are.
Because
Wow.
the market, and there's so many factors, so many pieces to it that change those rates and make it different.
Okay, all right. So what is best? What about the buy downs?
The buy downs are a little bit tricky. It's an option, and we have it available to us as well. The trick is the cost you have to pay for that buy down has to come from the seller.
Okay.
So the buyer, if they have additional funds where they might want to buy down the rate, they can permanently buy it down. But some of these shorter term buy down options, that money has to come from the seller. And as you well know, the sellers aren't always willing to pay for something like that.
Yes. So it really is kind of an individual basis and you just work it out as best as you can as you go along. So,
For sure.
okay, well, is there anything else you want to add before we're done here?
If you have questions at all, we'd love to talk to you. Please call us at Amarillo National Bank.
So Christy Conger would be more than happy to help you with your mortgage, and I would love to be the real estate agent to get you here and help you find that beautiful home. Call me at 806-584-7142. You found a penny.